This is the easiest way to read the stock market, hands down. What's going on, guys? Welcome back to another video. Today we're going to be doing a comprehensive breakdown on the Fear Greed Index. This is my top indicator, and it will continue to be my top indicator until the day I'm done investing. Let's get right into it. The first thing I'd like to cover, and the reason that I rely on the Fear Greed Index so heavily, is this quote: "Buy when others are fearful, sell when others are greedy." Warren Buffett. I have this posted on my wall. I have it saved in every device I own, and I am constantly repeating it in the back of my head when I'm investing. This man is a once-in-a-lifetime investor. He's giving us some free sauce right here. All you have to look at is the colored words: fearful, greedy. Buy when others are fearful, sell when others are greedy. And we're going to break down exactly what this means right here, but I would highly suggest writing down this quote, printing it out, putting it on your wall. Make sure that you remember this every single day that you are actively in a trade, actively looking to trade, actively looking to invest. Before we look at what the Fear Greed Index is and what it's made up of, we're going to look at a nice simple example. Fear and greed. These are just psychological factors that are present in any market at any given time. This is not just the stock market. It's also the job market. It's also the housing market. And I'm even sure it's in the black market. What you're looking at is how people perceive what assets should be worth based on how they're feeling. If you're buying this house, for example, in a fearful market, you're going to buy it at $350,000. If it's a greedy market, that same exact house is going to be worth $500,000. So which one of these is the better deal? It's quite clearly the one that is $150,000 off. And there's absolutely nothing different about the house. Nothing whatsoever. This is just the psychology of those people, those buyers, those sellers in that market at that given time. And again, this is present in every single market. Housing market, stock market, and a funny example, probably present in the black market. The most important thing to take away from this is that you are still getting that house. There's absolutely nothing different about it. Whether it's a fearful market, it's a greedy market, you still have that asset, that property, that job, that kidney, whatever you're buying in the black market, I don't know. You still have that property. The only thing is that the psychology of people that are also looking to buy or sell that asset has changed. Let's take a look at the Fear Greed now. This is the Fear Greed Index right here. Just go on Google, Safari, Firefox, whatever search engine you use, look up Fear and Greed. It should pop up with CNN. This is my recommended source, as the other websites that offer the Fear Greed Index put their own spin on it, overcomplicates it, not needed whatsoever. You all know I like to keep it as simple as possible. Keep it simple, stupid. CNN keeps it simple. I like it. I use CNN. Simple as that. So the Fear Greed Index is made up of 7 indicators. The first one being market momentum. What this shows you is the S&P in comparison to the 125-day moving average. There are about 250 trading days in any given year. So the 125 moving average is essentially 6 months worth of trading. This shows you what the momentum in comparison to the 125-day moving average is. So right now we're trading at fear. What that means is that the 125 is moving up faster than the actual S&P, meaning that we are coming back down to retest the 125 moving average. When this is at greed, it means that the S&P is moving up faster than the 125, so the market is being a little overbought. That's what gives you that greed measure. The second one is stock price strength. This one you don't really need to worry about too much. There's well over 2,000, 3,000 stocks listed on the market. This shows you how many stocks are making 52-week highs versus how many stocks are making 52-week lows. I don't really use this measure all that much. Very rarely does it drop below 0% like it is right now. It's at negative 2% as of January 3rd. This is definitely a buying opportunity with the read of extreme fear. Again, we're going to break down what fear, what greed means in a little bit. As of right now, I would say you don't really need to use the stock price strength. Stock price breadth, this one, same thing as the stock price strength. You don't really need to look at this, so I'm not even going to break it down. It'll just overcomplicate it. Put call ratio. This is just showing you exactly what it says. It's showing you how many puts versus how many calls are being bought. As of right now, we have 0.67 puts being bought for every one call being bought. So we're still in a neutral state is what it's reading. I would say we're still in a bullish state. If this ever gets to 0.8, 0.9, even 1.0 like it was back in April of this year, that means we're in a bear market. Anything over 0.9, 0.85 even, that's bearish. All you need to look at is what reading the CNN fear greed is giving you. So neutral right now, so it's neutral. Market volatility, this is looking at the VIX in comparison to the VIX 50-day moving average. If the 50-day moving average is dropping faster than the VIX is, then it is bearish. Bearish for the VIX, bullish for the market, excuse me. If the VIX is increasing faster than the 50-day moving average is increasing, then it's bearish for the market, bullish for the VIX. Safe haven demand and junk bond demand. Safe haven bonds are your 20, 30, maybe even 40-year bonds. If you can get those somewhere, really just stick to the 20, 30-year bonds. Junk bond demands are your 2, your 5, your 10-year bonds. The reading that this gives is if the safe haven bonds are being sold, that gives a decrease in the percent gain on those bonds. That means that people are no longer expecting the market to be in a bull trend. They expect it to drop. Junk bond demand, those are your 2, 5, 10-year bonds. People only put money in those 2, 5, and 10-year bonds if they expect the market to be in a bear trend for the next 2, 5, or 10 years. That's how you read these. Again, keep it as simple as possible. Just read, hey, fear, greed, okay. That means people are expecting the market to go down short term, maybe down longer term. Who knows? So that's the measure that this gives. You don't really need to worry about that. All in all you really need to... Now, using what we just learned, we're correlating that over to the stock market. Going back to the housing example, if you're buying a property in a fearful market, you're getting it for $350,000. If you're buying that same property in a greedy market, you're getting it at $500,000. Moving over to stocks, if I want to buy AMD, for example, AMD is a quality asset. We all have computers, Chromebooks, TVs that have AMD processors in them. Why is AMD so cheap right now? AMD last week was trading at extreme fear along with the rest of the market. However, after this past Friday, January 3rd, the market's trading at 32 fear, so it's gone up from extreme fear. And AMD is up 4%. It's probably going to continue to push up to 127.62. And then we zoom out a little bit more. Let me delete these real quick. It's probably going to continue higher as the market goes from fear, which is trading at right now, to greed, to extreme greed, and then back to greed, and then back to fear, and then back to extreme fear, and so on. That's the way the market cycles, and it usually happens every 3 months. So August 5th, we had the world was ending because of the Chinese carry trade, Japanese carry trade, whatever it was. Everyone was panicked, and we go look at SPY on that day. I have the day marked right here. Oops. August 5th, SPY dropped 2.9%. It actually opened closer to negative 4% on the day and then got bought up over 1.5%. And then what did it do for the next month? Went straight up. SPY went from 511 all the way up to 562. That is a move that usually takes a year and a half that SPY made in a month. And that's simply because of how low the fear greed index is. All in all, the fear greed, the simplest way to look at it, if we are trading at extreme fear or fear, people are selling assets for less than what they should be worth. If we're trading at greed to extreme greed, people are buying assets for more than what they should be worth. August 5th, we were trading at extreme fear, so that means that people were selling assets for much lower than what they should be worth. In smart money, people like Warren Buffett, or the people that trained under Warren Buffett, or anyone that listens to him, knew, oh my God, SPY dropped 4% in a day, I'm going to buy that up. It goes from 4% to negative 3%. Yeah, it only made a percent move, but that was just the start of it. And then you see investors that were caught offsides, I should say. You see investors that were caught offsides get back on the right side of the trade, and then the trade starts squeezing higher and higher and higher and higher until the point that you have another little blip where buyers were caught off sides. And now those buyers are overextended. They need to sell some of their positions, and bears take control. And then moving back to another date, September 10th, we go and look at the chart. Look at that. We went from extreme fear up to almost extreme greed, 63. And then we went back down to fear. September 10th, we were at fear. That means assets were being sold for less than what they should be worth. Go and look at this chart again. And then we went from fear all the way up to greed, basically extreme greed. 75 is extreme greed, but it's not marked on here. And then what'd the market do? The market went from fear at 540 all the way up to over 600. Now, using what we just learned, the stock market's currently trading at extreme fear to fear. What do you think is going to happen to SPY in the next 2 to 3 months? Do you think that we are going to perform this head and shoulders pattern that almost never works, when it should anyway, and drop to the depths of hell in the market? The market's going to cease to exist? Or do you think that over the next 3 months we're going to see something like August 5th play out, where we have a sharp pop up to August 30th, and then a drop to September 10th if bulls get caught off sides, and then continue to new highs in the market? I'm expecting probably 650, 660. And that's simply just looking at the fear greed index. Now, there are instances where this carries out for 2-3 months at a time, like we were at earlier this year. But remember, the market is designed to increase in value. It's not designed to constantly crash and then, oh, the world's ending, the stock market's going to cease to exist. It's not designed to do that. The S&P, the NASDAQ, these are all managed by investors that know, okay, if we have a stock like Kava, if we have a stock like this that is trading at 10 times, 20 times, 600 times, in this case, what it should be worth, we're not going to stay invested in that. We're going to sell it. We're going to get rid of it. We're going to offload. We're going to take our profits and move on to another pick. Hey, maybe Oklo's a new pick. This is a uranium miner. Uranium's going to be the new source of energy in the coming future. We're going to invest in this instead of Kava, and maybe over the next year, Oklo makes a move up to 60, and then 100, and then 150. And Kava, in that same time, it's going to be forgotten. It's no longer going to exist. And that's because investors manage the funds that the entire U.S. economy invest in. Ain't that something? If you look at the fear greed index and you see red, you see fear, or even extreme fear, that means assets are being sold for less than what they should be worth. Now, if you look at the fear greed index and you see greed or extreme greed, that means assets are being bought for more than what they should be worth. The market should be trading at neutral at all times, and that's what the market would be doing if it was following the EMA, the estimated moving average, or expected moving average, either one. If the market trades at neutral forever, that's boring. People don't like that. The market fluctuates every 3 months based on the psychology of big money traders, hedge funds, whales, whatever you want to call it. And the biggest takeaway here is the reason that we trade from fear to greed. It's exciting, and people like content. People like going on CNN. They like going on ABC. They like going on any news source and seeing something that's going to get their heart going. The easiest thing to spread is fear, because people have skin in the game. If they have $10,000 invested, $40,000, $50,000, the 401k, if they have that invested and they see on CNN terrorist attacks, they see the markets crashing, they see Trump's the worst president ever, they're going to get scared. They're going to sell their assets, and they're going to sell their assets for less than what they should be worth. Now, fast forward 3 months and we're trading at greed, extreme greed even. People go on CNN, they see the stock market's at all-time highs. You should be investing every dollar you make right now. The stock market's working. The stock market's blessing people. That's when retail investors, whales, hedge funds, they get caught off sides. They buy assets for more than what they should be worth. And the psychology flips. Nothing changes about the market. Nothing at all. It's just the psychology that changes at that time. So if we're trading at fear like we are right now, and we go down and we look at all these metrics and market momentum, fear, strength, fear, breadth, fear, neutral, fear, greed. This gives us a reading of fear, and we see, okay, assets are being sold for less than what they should be worth right now. We go and look at SPY. SPY's been in a downtrend for 2-3 weeks, really since Christmas. This is a buying opportunity. The market does not crash when everyone is scared. The market does not continue to push up when everyone is bullish. And that's because statistically most retail traders fail. That's why they have to give their money to someone that knows what they're doing, that owns more money, has a higher position of power, and so on. The last example we're going to look at is going to be Riot. So this one I've been loading up for the past 3 weeks, really 3 months, pretty heavily. The reason that I've been going so heavy and so confident in the past 2 weeks is because look at what the fear greed is. Fear. We actually tapped extreme fear on Thursday, but this asset is based off Bitcoin and Ethereum. And you see over here on the right, Bitcoin trading at 97.98. Bitcoin hasn't really moved since November 23rd, 22nd. Bitcoin's flat. Why did Riot spike up, spike down, spike up, spike down, back to having an 18% day on Friday? And that's all because of the psychology. The fear and the greed associated with Riot. Riot holds Bitcoin. Bitcoin hasn't really moved for the past 3 months, but Riot has gone from 12 up to 14, back down to 11, all the way back up to 1480, all the way back down to 10, now right back at 12. Same exact thing if we look at Riot right now, all the way back to the beginning of November. If you had bought on November 6th, it is at the same exact price. The only reason it fluctuates so much is because of the fear greed. Now, the stock is consolidating. It's getting ready to push. And guess what? The fear greed is lining up perfectly. Now, if Bitcoin can get a nice continuation up to those 100,000, 108,000 highs, Riot's got all this consolidation. It's got an absolutely enormous demand zone right here. This stock is looking good to go and hit 14 again and then never look back. 18, 19, 20. Same thing with AMD. I lied. Riot wasn't the last example. AMD's been getting beaten down, but it's made a higher low, and the fear greed lining up for this stock again. If we get a continuation and bears are caught off sides, this is going to go 132, 137, 145, 150. And then maybe a little pullback from there. But the reason that this stock has been getting hit so hard, even though it has such good company metrics, is just the psychology factor. That's it. You need to lean on the fear greed index as much as I do, because it gives you a measure of what the psychology is in the market at any given time. This past week, extreme fear, assets are being oversold, bears are going to be caught off sides, market's going to push. Fast forward 2 months from now, say it's trading at greed, extreme greed, opposite thing. Assets are getting bought for more than what they should be worth, bulls are caught off sides, stock market's going to tank for a week, 2 weeks, 3 weeks. Simple as that. I would suggest rewatching this video as many times as you need until you grasp the fear greed index and how useful it is. Go study Warren Buffett. Go look at how he invests and why he was so good at what he did. That's all from me today. I will catch you guys next time. Peace.